Welcome back, everybody. So again, we have volatility in the market. So I thought I'd do another impromptu video with the news that's hit over this past weekend. Because if we look at the stock market this morning, we see that futures are down by quite a bit. And if you're like me and you have these big mega caps in your portfolio, like your, Apples, Amazons, Metas, they're all down a lot. And when I mean a lot, you can just look at the pre-market stuff from my portfolio. Meta's down over 9%, Nvidia down 14.61% in the pre-market. Amazon down over 9%, Apple down over 9%. So what is going on? Now, we're going to talk about this today. And there's really two things, I think, over the past few days that people have been talking about a lot that I think are impacting this. And I think it's more one than the other, but we'll talk about both. And the first thing is Warren Buffett sold a good portion of his Apple stake. And it was released when they put out their 10Q over the weekend. And people did a little bit of math and a little bit of, I don't want to say sleuthing because it's in the 10Q, it's public information. And we'll take a look at that. But then also there's this idea of the yen carry trade that people have been talking about a lot, and about how that unwinding is the reason for a lot of the market volatility that we've been seeing over the past couple of days. So we're going to talk about that today, hopefully get a good idea of what all that means, what's going on. I'll tell you my personal thoughts about it in terms of how I'm approaching it or how I think about it. And I think what we'll find is that the answer, depending on your situation, is probably going to be pretty similar for both of those things. But let's dig into it. All right. So first off, if we look at markets, we can see that futures are down across the board. Now, even NASDAQ futures, they're down close to 6%. S&P futures, close over 4, close to 4.5. But as you saw, the futures for these big mega cap stocks, which my portfolio is very heavy in, they're down even more. And I'm going to explain why here towards the end. But let's talk about one in particular, and that is Apple. And so the big news that came out on Saturday was that Berkshire Hathaway slashed their Apple stake. Now, if you remember, they had close to half of their stock portfolio was in Apple as of, I think, last quarter. Even though they did already trim it last quarter, which was big news at the time. But basically, they're talking about here that they sold a net of $75.5 billion in stocks. And if we scroll down here, we see that they sold close to half of its Apple stock in the second quarter, which leaves them with about $84.2 billion in Apple stock at the end. And so the way that we can actually find that information is Berkshire released their 10Q over the weekend. And really, the easiest way to do this is really the most simple one. And open up their 10Q, do a find for Apple, and here it is. Because they basically showcase, here's their largest positions out of their equity portfolio. And so as we can see, as of last quarter, Apple was $174.3 billion of their $353 billion portfolio. So it was just under 50% as of last quarter. And then now, if we look at where it's at, they say it's at $84.2 billion out of their $284 billion portfolio. So what that means is that as of last quarter, it was about half of their equity stake. And then as of this quarter, it looks like it's around 29% of their equity stake. But as you can see, the actual dollar amount of Apple went down by about half. And this was a quarter where Apple was up pretty big, so they must have sold quite a bit of shares. But then obviously the main question people have is, why did he sell his shares? Does it mean that Warren is worried about Apple? He sees this as a top, or he sees that Apple's not a good company anymore? And I think he covered this a little bit last quarter when they actually sold then. And if you remember, it was pretty big news at the time because it was the first time that he had kind of sold any of his Apple stake. And he actually touched on it in the Berkshire Hathaway meeting, where he called Apple an even better business than American Express and Coca-Cola, which are the two other big positions that he's held for years. And I talked about this in a video back in May, and here's what I said at the time. But Warren Buffett and Berkshire sold about 13% of their Apple stake over the past quarter. And even with that sale, Apple is far and away Berkshire's largest stock holding. And when asked about it, Warren said a couple different things. So one, he talked about how they look at stocks as businesses, which should come as no surprise. And he still praised Apple, saying it's an even better business than long-term Berkshire holdings like American Express or Coca-Cola. So if that's the case, then why is he selling? Now, Warren hinted at it being at least partially a tax move, where they're going to have a 21% tax rate this year, which is likely to be much higher in later years. And personally, I'm guessing the fact that Apple was already over 50% of his portfolio, as well as, just being honest, right? Apple does have some growth concerns that are legitimate. And so if you have a holding that has that many capital gains, it's over 50% of your portfolio, and you have an attractive tax rate this year compared to what you expect going forward, then maybe that's a logical place to trim. Because obviously, if Apple was still growing like gangbusters, it's probably not the area that they would decide to trim. But still, I wouldn't take this as Warren or Berkshire thinking that something's actually wrong with Apple over the long term. He basically came out and said that explicitly. And so the most obvious reason that Warren would have sold Apple probably breaks down to a few different things that are all happening at the same time. So one, if you think that you have a decent tax rate this year compared to what it might be in the future, and you have a lot of capital gains that you have to realize, then that's obviously a big motivating factor to sell. Also, from a valuation perspective, Apple's valuation versus their growth, which we've talked about in previous videos, isn't really that great in terms of where they're at today. And then from a general risk management perspective, you have a stock that you had a 10x on, it was a home run, and now it's almost 50% of your portfolio. So it makes a lot of sense to maybe reduce that to lock in some of those gains. And then just from a macro standpoint, there's a lot of concerns that are all happening around the same time. Is there going to be a recession coming? Things are starting to look weaker, both in the US and other parts across the world. There's war going on in specific parts of the world. And all those things are true right now at the same time. So if you're Warren, it's pretty logical to think, look, I have a 10 bagger in Apple. It was a home run. I don't want to give any of that up with all this uncertainty out there. Maybe it's time to trim this. And while that makes logical sense, I think the question that a lot of us have is, okay, great, but what does this actually mean for us as retail investors? And I will say, Warren already sold part of his Apple stake last quarter, and everybody was worried about it, wondering if it was the top for Apple. And just so you know, Apple since that time is up 21% versus the market being up 3.5%. So clearly, at least his first sell, even though it was a much smaller amount, didn't really impact the stock. And I actually saw this take on Twitter about it that I really agreed with. And it's basically, he sold half his stake. A lot of people are asking me about it. And he goes through this example of, is this the announcement to sell or was it sold? The answer is it's sold. It's done. It's over. It's not in the future anymore. And in fact, you don't have a Warren Buffett potentially selling billions and billions of the stock just when you might be buying next week or the week after that. And so I think that's a really good point because we see these things are like, oh my God, Buffett sold. What does that mean for me? And he already sold and the stock is up big. The question, of course, is people look at it and say investor sentiment is going to be different because Warren is selling. And I think they make a great point here about that. Furthermore, if you run a large book like he does, and let's say you make Apple 12% of your book, and it does so well that it quadruples and becomes 48% of your book, and then you reduce it to 24%, still double what was a strong concentrated allocation to begin with, how is any of that bearish? And personally, I think that's the right mentality if you're a retail investor, especially if you're invested in Apple. And the way I look at it is this. If you're a long-term investor, it's simply a question of, do you still believe in the company? And if you do, then hold the company. Now, if you're swing trading or trying to actively manage getting in and out of positions a lot, then you might feel like it's time to move on from it. Or if you're close to retirement and you want to lock in a bunch of Apple gains from over the years, then yes, maybe. But for the most people who are investing for retirement, the question is more whether or not you still believe in Apple as a business and if it meets your criteria. And if yes, then it shouldn't matter what Warren or anyone else is doing because it's based on your own strategy and goals. Now, as for me, I'm going to be holding my Apple shares, which I mentioned in my last video. I'm just not adding at this point because I don't think the valuation is all that attractive. Now, if we look at the impact in the market right now, though, it's kind of an ugly story because as I'm recording this video, it's down over 10.5% in the pre-market, which is quite a bit. And again, if we look at my portfolio, it's just getting wrecked with all of these big tech names just coming down a lot. And something people have been talking about a lot this week is the yen carry trade, and that being the reason why the market's selling off. And we're seeing it in the news with the end of the carry trade, how Japan's yen could be ripping through US stocks. And I know if you're like me, the first question you probably have is, okay, well, what the heck is a carry trade? A carry trade is one in which money managers borrow in the currency with the lowest interest rates, yen in this case, and deploy that money in other assets. Equities, bonds, commodities, currencies that offer a higher return. But when interest rates of the base currency start rising, the profit margins shrink and the trades are liquidated. So I think this is a really good concept to understand, especially with what's going on in the markets right now. Because if we look at the chart of the US dollar versus the Japanese yen, we see that it's been on a strong uptrend as the dollar has gotten stronger. But what you notice is that over the past month or so, this has come down a lot. And ironically, about the time the market started tanking is about the time this started to come down the most, around mid-July. And the question then is, well, why is that? Well, the Bank of Japan raised its key interest rate again, aiming to curb the yen slide against the dollar. And if we see here, we see that it raised its key interest rate Wednesday to about 0.25% from a range of 0 to about 0.1%, acting to curb the yen slide against the US dollar. So the first question you might have is, well, 0.25% doesn't seem that high. It seems like a weird reaction for an interest rate that's relatively low. And in general, I would agree. But if you look at the history of their interest rate, we can see that, back in 2014, it was at 0. And then they actually went negative for a period of time all the way until 2024. And now in 2024, it was raised to 0.1 in March, and then now again to 0.25. So even though 0.25 seems pretty low, it's a pretty drastic change from where they've been for a long period of time. And if you guys remember, when the US was at super low interest rates for a while, and then we started raising them in 2021 and 2022 pretty sharply, well, you saw what happened to stocks back then. So now you have traders that were borrowing yen at cheap rates, converting that money and buying other assets with it, like US equities, especially the popular mega caps that were doing really well, plus things like Bitcoin and whatever. And now that the Bank of Japan increased rates, those trades become less profitable or not profitable at all, and they need to unwind that trade, meaning sell their equities and pay back the money that they borrow. And now again, I think the story is the same as the Buffett and Apple thing. If you're actively trading or you're close to retirement and you need to preserve capital, then this type of thing is going to be important to you because the market can be impacted in the short to medium term. But if you're a long-term investor, this should be looked at as an opportunity. You have traders and market makers presenting a repricing of quality assets. Now, part of the challenge is to know when is the right time. Like, should you buy now because you think they're cheap, or are they going to keep dropping? And the reality is there's no way to really know, and I'm not going to act like I can predict that. Because even for me, I added to a lot of positions last week as they started to come down, but now they're still coming down. So ultimately, you have to lean on whatever method you're using and buy the stocks you're interested in once they hit those ranges. And just understand that if they go down more, that's okay. And this is where really knowing why you're buying a stock is an advantage. Because if you're buying a company based on business fundamentals, then a drastic drop in price shouldn't be something that you worry about. Because ultimately, it is an opportunity. And especially if you think the price action is due to the carry trade unwinding, because that's something that's not based on fundamental factors. So if you are buying on fundamental factors, then it's something you can potentially benefit from. We just have to understand that there's going to be volatility and probably a lot of it. I mean, like with me, just look, my portfolio is getting rocked right now because I'm heavily weighted to those popular mega caps. But like I've said many times, the reason why I added those to my portfolio is because they're some of the strongest and best companies in the world that are generating a ton of cash. And that's not going to change just because there's a big unwinding of a carry trade somewhere. So even if they drop a lot over the short to medium term, over the long term, these are some of the strongest companies in the world, and I'm okay with that. So for me personally, I'll definitely be looking to add as they go down. I just may be a little patient to see how far down some of these go. Now, one thing that does come up a lot in these situations is people will say, well, maybe I should get out of these tech stocks and be in more defensive stocks, right? We've talked about this a couple times as I've gone the opposite way over this past year. And the reason for that is because my viewpoint is longer than just 2024, or longer than just, oh, we might be in a recession. And I'm not trying to rotate in and out of things all the time based on macro trends. That was, in my opinion, the big mistake I made in 2023. So at the end of the day, if these mega caps struggle for a while, that's okay. Like, I'm looking at the cash that they're generating, and that's what gets me excited about their business, not the price. So if anything, it's going to be an opportunity. Obviously, for those that have a more defensive portfolio, you should see a little bit better performance if this continues on the way that it looks, at least for the past week or so. The question again is, what are your goals? What's your timeline? And what are you looking to accomplish? Now, for a lot of folks out there, and I know because you guys leave comments, I think how people approach it isn't so much about rotating out of one company into another, but you're approaching it like, you're adding to these companies, like the more defensive companies when they're out of favor. And then now that these big tech stocks are selling off, you may be looking to add those. And that's a great approach. So in my case, I have, 11 holdings. So it's a little bit more concentrated than maybe, y'all's are. But that's okay. That's my strategy, and that's how I'm doing it. And so I'm expecting this to be a little painful here for a while, and it's going to look pretty ugly. But I have companies in my portfolio that I feel really good about in terms of their strength of their core business, and I'm not worried about it long term. This is going to be, in my opinion, even if it's the start of a downtrend, it's not going to be a long-term downtrend for these companies, at least from a earnings and cash generation perspective. But that's just my view on it. And like anything, we'll just have to see. But if you're out there, you hold some of these companies that I hold and you're worried, again, at the end of the day, why did you buy that company? And if the reason you bought that company is because they have a really strong business, they're generating a lot of cash, they're seeing good growth, then none of those things have changed over the past week. It's just there's some things going on in the market. If it is this yen carry trade, in my opinion, that's a positive thing over the long term because it means that we're going to get some cheaper prices and the business isn't really impacted. But that's just how I'm approaching it and how I see it. But I would love to know what y'all think. So let me know down in the comments below. Now, if you want to watch my video where I did a recap about the most recent earnings reports from Amazon, Apple, and Meta, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.